Hello, everyone, and thank you so much for joining me today. If you are a senior citizen or you know a senior citizen who owns a home, pay special attention because today we are talking all about reverse mortgages, what they are, what they're not, the myths around them, and most importantly, how to determine whether or not a reverse mortgage is right for you. So to help us navigate the ins and outs of this very important and often misunderstood resource, I have here with me my trusted reverse mortgage expert, Janice Cohen of Mutual of Omaha. Janice, thank you so much for being here with me today.
Thank you for having me, Christina. I'm excited to be with you today.
Oh, good. Me too. You are an 18-year veteran exclusively of reverse mortgages, so you know a thing or two about this industry.
Yes, I've seen it all at this point.
Perfect. So you are exactly the person that I want to be shedding light and shedding your wisdom on this topic of reverse mortgages. So let us dive right in. Let's start with the very basics for our viewers. Tell us, what is a reverse mortgage exactly, and how does it differ from a purchase money mortgage?
So a reverse mortgage is a federally insured program that allows a senior to convert a portion of their home value into tax-free money that they can use in a variety of ways. They can use it to pay off an existing mortgage. They can get a lump sum of cash. They can get monthly income, or they can just leave money in a line of credit for future use. And one of the magical things about a reverse mortgage is that if a senior opens a line of credit, unlike a line of credit at the bank, like a traditional HELOC, a reverse mortgage line of credit grows to the borrower's advantage every year at the same rate that borrowed money is charged interest. It's incredible and it's powerful because if someone doesn't need the money immediately, down the road there'll be more of it for them to borrow.
That's amazing. So whereas a purchase money mortgage is a borrower taking money from their own bank account as a down payment to then get a loan and buy a home, a reverse mortgage is one where an existing homeowner who has equity in their home can essentially borrow against the equity that they have and use that money for other needs.
Correct.
Okay, awesome. Okay, so that's like a very clear distinction as to what a reverse mortgage is versus the purchase money. One you're buying the home for the purchase money. For the other one, you're tapping into the equity of a home that you already own.
Correct.
Right? Okay.
Yes.
So I'm sure there are some requirements that have to be met in order for a borrower to qualify for a reverse mortgage. Can you touch on what those requirements may be?
So let's talk for a moment about the actual physical structure of the house.
Okay.
So this is a federally insured loan. The FHA insures this loan. So the condition of the house is, it has to be in reasonable condition. I mean, there's a long list of what the FHA expects condition-wise on a house upon which they're lending. The roof has to be watertight. There shouldn't be any, water stains in the ceiling. If there is a water stain, the lender is going to want to know what is the origin of this damage. There have to be handrails in place. The hot water heater has to be double strapped. So there has to be a smoke detector in every bedroom, a carbon monoxide detector, all of the things that you as a realtor, if you are if you're selling a home, you're going to also want to make sure that those conditions are met, that, safety conditions, health and safety conditions, so that your buyers or your sellers are going to be safe. And that's really the whole purpose when we look at home conditions. Another very important note regarding reverse mortgages and qualifying for them. So we talked about the house, the condition of the house, but when we look at a prospective borrower and their financial situation, we don't place as much emphasis on their income as we would if there were expectations of a repayment on a mortgage. My mortgage, I have to make payments, so I had to qualify based on my income and my debt to income ratios.
Right.
Whereas with a reverse mortgage, there is not the expectation or requirement that you make repayments. So we want to know that financially you can afford to pay the property taxes, the homeowner's insurance, the gas and electric, and put food on the table. But the financial requirements are not nearly as stringent as for someone who's coming in, buying a home using a traditional mortgage, or even doing a refinance using a traditional refinance mortgage.
Yeah, with the traditional way of either to purchase money loan or refinance, they're looking at tax returns, pay stubs, employment, debt to income ratios, all of that, and doing their underwriting. So it's not that there isn't some level of financial underwriting for a borrower to qualify for a reverse mortgage. It's just not as stringent.
Exactly.
As
In most
it
cases, my clients collect Social Security, or they have a pension or an annuity. I don't even need tax returns.
Oh.
I get a 1099 from the Social Security Administration. I get a benefit letter from Social Security. I get the pension statement, the continuation letter from the pension administrator, copy of the annuity, and I'm good to go.
Wow.
I don't
okay.
even need a tax return.
So then, talking about Social Security, is there an age requirement?
For the
For-
FHA reverse
yeah.
mortgage, which is a very commonly utilized reverse mortgage, the age is 62. But we have a proprietary reverse mortgage, which is most often used for, let's call it a jumbo situation, a home over, let's say 1.2, 1.5 million, which is most of Los Angeles.
Right.
We have a lower age limit for that, and it's 55.
Okay.
Yeah.
Okay. So 55 or 62, depending on the program that's
Exactly.
being offered.
Yes.
Anything else in terms of general requirements?
Well,
We talked about the condition of the home. We talked about the finances, and now the age requirement. Anything else?
we
in
do
that
look
regard?
at the credit, and we look at the history and of the ability and the willingness of the borrower to meet their financial obligations, particularly as it pertains to the maintenance of the house. When I say maintenance, I mean, are they paying the property taxes on time? Have they allowed their homeowner's insurance to lapse? If there have been financial issues in the past, we may be able to get around it if there are extenuating circumstances, loss of a job, death of a spouse, an illness, that we would need to document, and we would need to write a letter of explanation to the underwriter. However, if a borrower says to me, Janice, I was away and I just didn't keep up with things, or I didn't really have a really strong sense of what I needed to do financially, then we may, to the benefit of the borrower, set up an impound account where we pay on their behalf the taxes and the homeowner's insurance for them to make sure that the house never goes into foreclosure for any of those reasons. So if we do set up an impound account, that's going to be like a separate little pool of money. And it's going to be for their lifetime that we're going to be able to pay those taxes and homeowners insurance, and they don't need to worry about it.
That's awesome. It gives them peace of mind, at least, that if they weren't able to manage that upkeep and the maintenance and the responsibilities of home ownership, both financially or maybe even physically for the home, that there is an opportunity with an impound account to be able to do that, so that the home then isn't in jeopardy of
Right.
having missed payments, being sold out from under them due to foreclosure or anything like that.
Exactly.
Okay.
We want to make it as easy as we can on people. A lot of my clients are much, much older. Some of them are in their 80s. When a partner loses a spouse, if they are the partner who is not the person generally responsible for the finances, they may be so relieved and eager to have an impound account. They don't want to be responsible for this. Their late spouse took care of it. Let's just go with an impound. So it all depends. Some people they say, let's do everything we can to fight this impound. We want to do this without an impound. And I fight for them. That's my job. I'm an
it
advocate.
just becomes their choice at that point in time, but you also advise them as to what their options are so they can make the best decision for themselves at the end of the day. Yeah, amazing. So actually talking about, I'm wondering if we can transition now into the topic of who should consider a reverse mortgage. You know, what are these life circumstances that somebody might be facing that would make it appropriate for them to consider a reverse mortgage?
So that is a great question. And I very often say, you know, if you've seen a person who needs a reverse mortgage, you've seen one person who needs a reverse mortgage, and there's so many different scenarios. The number one scenario, and most of these particular clients come to me from financial planners. The most common scenario is that this person is on track to outlive their money. And maybe they have a few $100,000 in invested assets, or they have they have a very high mortgage and they can't meet their expenses each month, but it's clear one way or the other that they are not going to make it financially to the finish line. And it is so interesting to me, a lot of the financial advisors who refer their clients to me, they'll call me and say, look, Janice, I had this woman in my office today. She wants to become a client. She doesn't meet my minimum, but I have spent time with her advising her that she needs to talk to you because the only money she's going to have is the money that she realizes from the reverse mortgage, and that's going to get her through. So I always love it when people have a trusted advisor that sends them to me, because they understand the importance. And, you know, seniors, their biggest fear is running out of money.
I mean, it's scary to think. Yeah.
Yes. And LA is not an inexpensive place to live.
Right.
For women who are homeowners, their biggest fear is being homeless, which is just incredible to know.
Yeah.
But because women just go to the worst case scenario. That's it. I'm out on the street. I'm homeless. So this can really help put people's minds at ease, and that's what we want. Another scenario, I get calls from adult children. Hi, Janice. I've been giving my mom $2,500 a month for the past 7 years. I have a brother who lives in his teenage bedroom, and I have a sister who is raising children and not working outside the home right now. So neither of them are able to help support my mom, who needs the money. And I have children going away to college next year, and I'm really funding my siblings' inheritance. But because at the end of the day, they're going to be equal partners with me as beneficiaries to my mom's trust. But here I am, I'm out hundreds of thousands of dollars.
Yeah, shelling out all this money.
Right.
Yeah.
So doing a reverse mortgage is going to make support of mom more equitable amongst all of the siblings. So it's usually the wealthiest child who comes to me, the one who's been actively helping mom or dad or both, that child will say, we've got to do this because I have my own expenses and my siblings can't or won't, and, you know, then that's what we need to do. A lot of times a senior starts to need help in the house, and the kids might say to him or her, you know, maybe it's time to go live in a congregate setting, an assisted living, Belmont Village, or even, you know, very lovely places that are out there that are available. But for them, sometimes, you know, they have pets that they don't want to part with.
Right.
Or for them, it might be a social situation. You know, they go there and they see that people there are maybe older than they are, more disabled than they are. They don't like that feeling of being in that population. I mean, there are plenty of wonderful people who can help a senior find the right scenario where they're going to be happy.
Right.
But it is challenging, and it can be depressing for someone to change their environment. And if they really want to stay in their home anyway, then this is one way that they can do it. Another scenario, especially here in Los Angeles, that I see all the time is if a couple are still, they're still together, of course, and they bought their house back in the 70s for $80,000, and it's now worth, and this actually happened to me, it's now worth $4 million.
Wow. Yeah.
This happened in Beverly Hills. You can only imagine the long-term capital gains taxes that couple will have to pay if they sell their home and move, to a more affordable environment.
Right.
So to avoid long-term capital gains taxes, it may make sense not to sell the house, but rather to stay home, be able to meet their expenses by doing a reverse mortgage. And for a vast majority of them, they want to stay in the house anyway.
Right. After they've been there for so long, you know, it's not an easy decision to make to just say, okay, I'm just going to pick up and leave now, just uproot my whole life.
And you know what's interesting? As people age, they lose some of their flexibility in terms of what they're willing to accept in their life and what they're not. They like things the way they are, but also their vision gets worse, their walking gets a little worse, and knowing where they're going, even in the middle of the night, they're getting up to go to the bathroom.
Right.
You could do that with your eyes
closed.
Exactly. There's so much value to that, to not have to adapt to a new environment. A lot of my borrowers have their children and their grandchildren here in Los Angeles. They like the idea maybe of moving to the desert or moving to Arizona or wherever they're going to, they're looking at moving to, but they don't want to be isolated.
Right.
They want to be near family and friends. They want to go to the birthday parties. They want to go to the sporting events and support their grandkids and, have their daughter go with them to a doctor's appointment. These are things that are meaningful and important. I have clients who do not have long-term care insurance. I would urge everyone who's seeing this today, please consult with a financial planner or a representative from one of the companies that does long-term care insurance. There are wonderful plans out there now where it's not a use it or lose it situation. You can do all kinds of plans. I don't want to get into it because it's not my area of expertise, but I've seen how powerful it can be, how impactful it can be to have a policy like that. Another prospective client for me is someone who has a very strict budget and they're not doing things. They're not going out to lunch with their friends. They're not going to a movie. They're not driving up to Northern California for a family reunion. They're missing out on the things that make life meaningful.
Yeah.
So a person like that should really think about giving themselves a little extra breathing room.
So it's not like they are late on mortgage payments and they're in dire financial situation. Right. They're able to make ends meet, but they are denying themselves certain pleasures of life that do require some money just so that they can stay on a super tight budget.
Exactly. And I've seen a lot of those people, and they struggle the most. They'll say, oh, Janice, this was my plan. I really wanted to make it on Social Security alone. Well, how's that working? I mean, if you're not enjoying your life, but you're checking your balances every day, it's very stressful.
Yeah, they're just existing at that point in time. They're not really living and enjoying life.
Exactly.
There are so many scenarios, my gosh. I mean, there isn't just one blanket scenario that this encompasses. There are just so many different nuances and specific individual life scenarios where tapping into a reverse mortgage can really help an individual or families.
For sure. I've even done a reverse mortgage for a divorcing couple so that the one partner who wants to keep the house can buy out his soon-to-be ex or her soon-to-be ex.
Oh, wow.
That's a very strategic use of reverses. And gray divorce is on the rise. And if you talk with family law attorneys, they'll tell you it's a big problem, and it's very sad, especially
Yeah.
for people who've been married a long time. But this is a solution.
Yeah. Amazing. Wow. So on the flip side of this, and there are probably even more scenarios that that we just haven't even touched on, but I feel like you gave such a great overview of some very relatable scenarios for our viewers, so they can envision and think for themselves, like, oh, do I fit into this category or that category? But let's talk about the flip side. For as many people that a reverse mortgage could be a good option for, who shouldn't consider a reverse mortgage?
Well, I would say the number one candidate for not considering a reverse mortgage is someone who has a multi-generational home.
Okay.
If you're grandparents, let's say, and you have living with you your daughter and her children, and let's say, for instance, this is your only child, you want that daughter, you've already told me, you want the daughter to inherit the house, you want the children to be able to live in that house indefinitely, then a reverse mortgage really would not be in the best interest of your family, who is your main concern, or one of your main concerns. There are some rare instances where it may make sense with multi-generational home. If there are multiple children, only one of them is living in the house is going to need to be sold anyway at the end. But I would say it's tricky. A senior would not want to see their grandchildren displaced if something happened to them and the reverse mortgage needed to be paid back within a year. They would not want to see that happen. Their children, their grandchildren are in school, at a middle school or a high school, to have to find a new place to live in the middle of all that. It may not be, palatable for a senior to do something like that. Another instance is if a senior says to me, I really want to move. I'm going to move within the year or in 2 years. Well, if that's the case, it doesn't really make sense to do a reverse mortgage because there are upfront costs to doing a reverse mortgage, which just may not amortize well if you're only going to do this for 2 years.
Got it.
I like for people to do a reverse mortgage in their forever home. When someone says to me, this is where I'm staying, this house, it may even be a tear down. I hear that all the time, especially a house that was built in the 70s or the 60s. But we know there's a lot of value to those, mid-century modern homes. But they may say, well, I'm going to move. I'm definitely, moving. My best friend moved to Tucson. I'm going to be moving. My best friend moved to Las Vegas. I'm going to be moving there. So in that case, I would say, you know what, put the house on the market sooner rather than later and get to Vegas and start having some fun, with your friends.
Live the life that you've been envisioning.
Exactly.
Why delay that?
Because sometimes people think, oh, I need the money to make the house like a show place so people will want to buy. Well, truthfully, it's a seller's market right now. You may not have to make the kinds of improvements. And certainly a realtor like you can go into a house and say, no, just the way it is how someone's going to love it. Right. But people have it in their heads. They want to maximize the value of their home. But a reverse mortgage might not be the way to do that for the purpose of putting it on the market.
Right. Well, it sounds like, from what you're explaining, taking a very consultative approach with your clients is really key because there are so many different scenarios, so many different possible outcomes, different levels of needs and motivating factors that could lead to the decision. You really have to look at the holistic big picture and not just the numbers and nuts and bolts, but also their desires for the short and long term, and use it as a tool to help them accomplish their goals. And part of your analysis and your conversation and consultation with them is to help determine if this is even a tool that they should tap into.
Precisely.
You know, same thing like when you brought up homeowners considering selling their homes and making all these improvements to them. It is really important to take market conditions into consideration, not just decide to blow a whole bunch of money on making improvements that won't really go far. You know,
Right.
that there's no ROI on some of the improvements that homeowners typically think they have to do before selling. So taking that consultative approach and really peeling back the layers, not just what's on the surface, you know, but really going deep into what they need, what they want, why do they need and want it, what's the underlying motivation, and it's to help determine what the right course of action is.
Exactly.
Yeah. I want to touch on something that I think it's a pretty common perception. You know, when you Google reverse mortgages, one of the suggestions that comes up is, are reverse mortgages a scam? You know, I want to talk to you about this because in my conversations with a lot of people, if they hear the word reverse mortgage, they're like, oh, I don't want to touch it. You know, it's a scam, it's fraud. You know, help shed some light on this. Can you explain, first off, why do people think it's a scam? How did it get to this point, and then how is it not? You know,
Okay.
what's the reality of this? Let's get down to it.
I am so glad that you're asking about this because, yeah, reverse mortgages have a fraught history.
Yeah.
When the first reverse mortgages began, they were the endorsements were by private lenders, not FHA. FHA came into this business in 1984. But these were private lenders who would impose their own conditions and their own standards on this loan. They would go potentially on title with the borrower and do equity sharing. They might have in the note that if there is only X amount of equity left in the house, that the senior has to leave the house. So that is problematic.
Yeah.
So we were seeing people, when a house would get sold after a private reverse mortgage, the family would have no equity to inherit. Or they would have to take in mom because she was kicked out of her home because an unscrupulous lender had that in the note of the private reverse mortgage.
Well, that would explain why people felt or feel, if they don't know the truth now, since 1984, as to why it was a scam.
Exactly. FHA took over reverse mortgages and began to regulate them and insure them back in the 80s.
Okay.
And that really changed the reverse mortgage environment. But there's still, there are issues that still have followed reverse mortgages. I will say, in 2010, the government instituted the Reverse Mortgage Enhancement Act, which changed the face of the reverse mortgage in some very good ways. And it also changed the reputation of the reverse mortgage. It elevated the reverse mortgage reputation, and I'll tell you how. So number one, if there was an underage spouse in the home, that spouse, even if they could not be, and when I say underage, I mean under the age of 62.
Right.
If that spouse could not be a reverse mortgage borrower, they would still have lifetime rights to the house.
Oh, wow.
Whereas before this was instituted, what we were seeing were some lenders who would say to a borrower or a couple, hey, you can do a reverse mortgage with your younger wife, but you're going to get less money than if you take her off title and do the reverse mortgage just in your own name. Well, guess what? Husband passes away. Wife is not a borrower.
Not on title.
She's not on title. No rights to
No
the
rights.
house.
Yeah.
So now, as long as a couple is legally married, no matter what, the couple, even if the younger borrower, a younger spouse is 29 years old, which is, they still have lifetime rights to the house,
Right.
which is incredible. So that's number one, a very important enhancement. Number two, a very important enhancement is the financial assessment that I discussed earlier, where we look at the history of the willingness and the ability of the borrower to meet their financial obligations, especially as they pertain to the home. So it used to be that, I mean, I began in this industry in 2005. If a person could fog a mirror and the house appraised, I could do a reverse mortgage for them. No longer the case. Now, you really have to either have enough equity for us to do an impound account, or you have to have decent history, not owe so much on credit cards that all of your income is going to pay credit cards.
Right.
It has to make sense.
Right.
And when it makes sense, that equals a successful relationship for the borrower and the reverse mortgage. We don't want to lend money to someone who clearly does not have enough income to pay their homeowner's insurance.
Right.
And believe me when I say, you and I both know people in Malibu whose homeowner's insurance could be $20,000 a year.
Yeah.
If they're living on Social Security, that could be a problem. So we want to make sure they're financially sound going forward. No one can predict what the future is going to hold for them, but we do hope that things are going to remain stable for them, and all things being equal, we look and make sure, yes, this can work for your lifestyle, and it'll make sense for you to remain in the house.
Because diligence is actually being done now in terms of financial underwriting and assessment versus back before 1984.
Right.
When there wasn't anything.
In 2010.
There was no oversight,
yeah.
excuse me. In
yeah,
2010.
there was
Yeah.
no oversight. I was taking people out of foreclosure right and left. They were foreclosing on their traditional mortgages. They hadn't made payments. And, it was very rewarding to be able to do that. So I actually did it 6 months ago with a lady who lost her husband to ALS. It was very sad, but that was an extenuating circumstance. That was an extenuating circumstance. Why did the house go into foreclosure? All of her resources were going to take care of her husband who had ALS. So we were able to get her out of foreclosure, get the reverse mortgage done, and she's in great shape now.
That's amazing.
It was amazing.
Oh my
it was
gosh.
so
Imagine how alleviated she must have felt knowing that after dealing with all the stresses, the financial, emotional stresses of her husband, now she can at least stay in her home.
Yes.
Yeah.
And there's nothing more rewarding for me than after the loan funds and getting a phone call from someone like her saying, Janice, I had the best night's sleep that I've had in 5 years.
Oh my gosh. It's like, amazing.
Wow. That is so impactful.
Yeah. Really makes you feel good about what you're able to do to help people who really need it.
Absolutely.
Yeah.
It's such a great feeling. And the last thing that I would say is and this has to do with what happens after a senior passes away, which some people may think of as a scam, but it's actually not. If you don't have your home in a trust, it's going to go through probate.
Right.
And if there's a reverse mortgage on it, that reverse mortgage is due and payable within 6 months of the passing of the homeowner. Now, we both know probate can take longer than 6 months.
Oh yeah, it could take a couple years.
It could take a couple of years.
Yeah.
So the family may get foreclosure notices from the reverse mortgage company. We don't like that to happen.
Yeah.
I don't want that to happen. The reverse mortgage company does not want that to happen.
Right.
If you have your home in a trust, and again, I'm going to say to anyone listening, please you have a very valuable asset if you own a home here in Los Angeles County. You should absolutely talk to a trust and estates attorney and get your home into a trust. Not only create the trust and then put the home into the trust, because you can create a trust
and not put the home in there.
Not put the home in the trust. And I'm like, wait a minute.
Yeah.
So
it's definitely one of the things that I advise my clients to do. You don't need to have the trust in order to buy the home, but I highly recommend to them just establish the trust, talk to a trust attorney, because that's really what's going to help you decide when you pass away, who is your home going to go to? You get to choose. The process of probate is essentially the state telling you who your home is going to go to, who your assets are going to go to if they're not held in a trust. So I'm actually going to have probate and trust attorneys for some of my next videos that I'm really excited to share. But I'm so glad you brought that up, because it really is an essential protection that any homeowner should have. It is, for most people, your greatest asset. Yes. So protect it.
So with a reverse mortgage, as I said, it is due and payable within 6 months of the passing of the borrower. Mm-hmm. However, you can apply for a 190-day extension, which in all likelihood will be granted. And if the house is on the market, all attempts are being made to get the reverse mortgage paid off, either through a private money loan, or one of the kids is going to apply for a mortgage in his name and take ownership of the house, whatever the case may be. If things are taking more time, you can actually have up to a year before that reverse mortgage needs to be paid back. But during that time, the reverse mortgage is growing because there are no payments that are being made, and the servicer is probably having to pay the taxes and insurance potentially. So, probate is a nightmare, and
we want to try to avoid it at all costs. And the good news, it's 100% avoidable.
100%.
It's 100% avoidable.
Yep.
If you establish a trust. Exactly.
So you can imagine if you're an adult child of a borrower who didn't have their house in a trust, and they didn't they got a foreclosure notice. Now you can, as I said, there are ways to avoid foreclosure. The servicer does not want to foreclose. But if you get a foreclosure notice, you may say, gee, that reverse mortgage is a scam. My mom died, and now they're sending me foreclosure notices. Well, we know that this can be avoided very, very easily, as you just said. And even if the house has to go through probate, there are ways to avoid foreclosure. But that can leave a bad taste in people's mouths.
Of course, yeah. Which I think is the perfect transition into the next question that I had, which you already kind of touched on, is what happens when the senior dies? And like a traditional mortgage, a reverse mortgage does need to be paid back. In answering that question, can you also go through what can be expected, like from start to finish? Walk us through the mechanics or the process that you would go through with a client of yours, a potential applicant who's interested in getting a reverse mortgage. What can they expect? You mentioned an appraisal, you mentioned the financial underwriting, and from start to finish, which is when the senior passes away and now the mortgage needs to be paid back.
So upon the passing of the borrower, which the servicer will find out about, I get phone calls from adult children who say, my mom passed away, but I don't want to call the servicer and tell them. And I say, well, they know.
They already know.
They know.
Yeah.
There's a Social Security death index. They know.
Yeah.
And they're like, oh, okay.
Okay. Yeah. The reality.
Now what do I do?
Now what do I do?
Yeah, you're not going to be able to live in the house for the next 2 years, without them finding out, because they don't need to find out from you. But I will get a call, saying, what happens now? And I tell them, I ask them, is the house in a trust? And I tell them you'll get a condolence letter from the servicer. At the time of the passing of the borrower, the servicer will send out an appraiser to see. It won't be an inside-outside appraisal the way it was when we're originating the loan,
Okay.
but it'll just be maybe a drive-by just to kind of get a sense, what is the house value now, vis-a-vis what is the loan balance now, so that the bank has a sense of how much equity is left, the family can have a sense of how much equity is left, and then the servicer is going to want to speak to the trustee of the trust and find out what the intentions are for disposing of the property and getting the loan repaid within 6 months ideally, but if not, as I said, there can be a 90-day there can be a 90-day extension and another 90-day extension if need be. But it's pretty straightforward, unless, of course, there is either, sometimes people have their adult children living in the house, not on the title, not on the mortgage, and potentially not willing to leave the house. That can be a problem, not only for the adult child who's living in the house, but for his or her siblings as well, who might say, like, dude, we need you to move out of your teenage bedroom because we want to sell the house.
Yeah. Well, because there's an obligation that needs to be repaid.
Exactly.
And I don't know, this might be more of a legal question, so I don't know if you know the answer to this, but would that kind of create like a weird kind of tenancy situation, like a landlord-tenant situation, even if there may not have been like a written lease? Or...
If the person is receiving mail at the home, then he is legally a tenant.
Oh, wow.
And he could potentially need to be evicted.
Wow, okay.
So it
Yeah,
can
that can definitely complicate things.
Yeah.
Yeah.
Yeah, we hope that those kinds of things don't happen, but we know that they do.
Yeah.
So, but just sometimes. So.
Yeah. Wow. Okay. Always something interesting in the world of real estate and all the other industries that cross paths with it. Well, so sorry, that was kind of like a derailing. It just kind of like lit a light bulb in my head. So you were mentioning, like, in terms of the appraisal that's done, the drive-by, making sure that the home is in a condition where it's saleable and the reverse mortgage lender is going to be getting their funds back. And at that point in time, assuming everything goes smoothly, if there's any remaining equity in the home, that would then be dispersed to the beneficiaries?
Exactly.
Okay.
People think, when you do a reverse mortgage, the bank takes your home. Nothing could be further from the truth.
Thinks, yeah.
I always used to say, Mutual of Omaha we have enough office space. We do not need your home. We don't want your home. We just want, the mortgage to be repaid, just like any other lender.
Right.
So, yeah, we do not want to be in the business of real estate, of owning real estate, of paying taxes, paying insurance. That should be any proceeds of the sale, above and beyond the payoff of the mortgage, go to the beneficiaries of the trust.
That's good to know. And so can you just briefly just walk us through like your intake process? Somebody calls you and says, Janice, I'm considering doing a reverse mortgage. Can you walk us through what that might look like from your end?
Absolutely. So as we've already discussed, there are like so many different scenarios, but I do collect some information. I will look at their credit, discuss the pros and cons with them. And I just always feel like, disclosure from the outset is really the best policy. And then, and this is a big protection for seniors. Then I talk to them about making an appointment with an FHA reverse mortgage counselor. That is a requirement for every person in the nation who wants to do a reverse mortgage. They have to do a consultation with a counselor who has been authorized by the Federal Housing Administration. So just a month ago, I had an attorney who was a reverse mortgage borrower with me, and he said, Janice, I've been practicing law for 40 years. I don't need to do a consultation with the FHA. That's for someone who's, in a different field, and I understand these things. And I said, I get it. But every single person needs to do it because you are going to be issued a counseling certificate which becomes a page in your application. We can't even submit your application without that certificate saying that you've completed.
I think that is so great.
Yeah. It's a
That's
disinterested
definitely a way
third party.
and that's what I was going to ask. A disinterested third party, they just want to make sure that the borrower is understanding the process, they're getting the disclosures that they need, that nobody's pressuring them into getting a reverse mortgage.
Right. We
That's
even have
fantastic.
We even have a document that they sign saying no one is. It's an anti-coercion page that no one has coerced them into getting a reverse mortgage.
Because I'm sure some people get a lot of pressure potentially from family members who are maybe down on their luck, tight on finances, mom and or dad have equity in this home and they're looking for some help from them and they just keep pressuring, just get a reverse mortgage, I just need some money.
I've had seniors call me and say, my son wants to open a restaurant. I want to give him $1 million from the house.
Yeah.
And I've said, have you looked to see what the statistics are for restaurants?
Such a tough business.
Such a tough business. I mean, wishing your son all the best, but...
Yeah, but given your age, your financial circumstances, your health, what other insurances you may have in place, your whole picture, it may or may not be a smart move for you to do. Wow, I'm so glad you brought that up because it's a very real scenario.
Yes.
So assuming that you do your intake process, you advise them of the pros and cons, you go through and connect them with the FHA appointed counselor, they submit a package then, it sounds like, and assuming they get approved, am I missing anything between the counselor and submitting the package?
Well, after the counselor, we submit the package, then they have an appraisal, and we pull title and order payoffs and get the trust approved with our bank attorney. And the whole process is usually about 4 weeks. Could be a little bit longer if there are any liens or judgments on the house, and we have to, or if there are
do
any...
those get paid?
Yes.
Liens and judgments?
Yes.
Okay.
Yes, they do.
And if there's like a small existing mortgage, like would somebody who has a small mortgage on the home potentially be able to qualify for a reverse
absolutely.
mortgage?
Even a large mortgage.
Oh, okay.
I'm doing a reverse mortgage right now for someone who has a $1 million mortgage. So it's very, very interesting. At this moment, we do have a program that is a reverse second, where someone, if they are financially able to demonstrate that they can continue to make payments on their first mortgage, we will lend them a second, upon which there are no payments required or expected. So if they have a $1 million, and this particular couple, they have a $5 million home, they have a $1 million mortgage, and we're going to be able to give them another $1 million in the form of a reverse mortgage, a second mortgage.
Wow.
Which they'll only have the continuation of payments on the first mortgage. The second will not require any payments, which is
Until
really...
after they pass away?
Right.
Got it, okay.
Right. But the financial assessment for that program is a little bit different than on a traditional reverse, because we need to see, yes, they can continue to make payments on their first mortgage.
Yeah, so
because
they don't get foreclosed on.
Exactly.
Right. Yeah. Oh, amazing. Okay. That's good to know that you can do a reverse mortgage second.
Yes.
Okay. Wow. Okay. I keep interrupting you with these questions,
No,
but
it's
you
fine.
keep saying like such valuable stuff that spurs another question in my mind. So, application is submitted. Appraisal happens.
Yes.
And then?
And then once we have the appraisal and the trust and everything is in, we send it to underwriting, we get an approval. I have wonderful processors and underwriters. I have a whole team that I work with. I have a client coordinator. She's just terrific. And she has a way of kind of, telling my clients if there's an additional document that we need without stressing them out, because it's always stressful when you get that phone call.
Right.
Like even for me, when I did a mortgage and I... There was, I need to explain a deposit into my checking account, okay.
Right.
So it can be stressful for, for me and for you. You could only imagine for someone who's in their 70s or 80s.
Yeah.
It's like,
And
Why are
not
you-
in either of our lines of work on top of that,
Right.
Yeah, we see what we see every day.
Every day.
Right, but that's not the case for the clients that we work with.
And
for
in
the
many
most part.
cases, they haven't done a refinance or taken or borrowed any money since the Dodd-Frank regulations went into effect. So they don't know how different it is that you do have to do a lot more than fog a mirror
Right.
to borrow money.
Yeah, before then it was like the wild, wild west,
The Wild West is like, yeah, you're cute. Here's some money.
Yeah, here's
And,
some money.
and
Yeah.
now, you really
It's like hair samples, DNA.
right. Exactly.
Yeah.
So they're like, this is crazy. I'm like, oh my gosh.
Yeah.
It does feel crazy.
But it's so great that they have you and your team to guide them. And
Yeah.
at the end of the day, assuming that, they've been informed of everything, they get approved, and they're able to stay in their home and
Yes.
have the financial stresses alleviated from them.
Yes.
And they can write out the rest of their days enjoying their life,
Yep.
essentially.
Yep.
And when it does come time that they pass away, at that point in time, the home will be sold,
Yeah.
essentially.
Yeah.
That would be the way of repaying
Absolutely.
the mortgage. But in the meantime, up until their very last day, they can remain in their home, living the life that they had intended on living, and then the family can take care of it after the senior passes. What happens when, let's say the senior had every intention to stay in their home until their very last breath, but then there was a change in, let's say, health circumstances, and they had to go into a facility where they have 24-hour care. Is there a requirement for the senior to be residing in the home full time during the course or the term of the reverse mortgage?
That is a very interesting question. If a senior needs to be in rehab or nursing care for a period of time, they certainly are able to do that. And the loan does not become due and payable.
Okay.
Because we really we understand that there are instances, a broken hip, early onset dementia, whatever the case may
Yeah.
be, people sometimes need to spend time outside of their home getting help. And you can go for, as long as this is legally still your primary residence, you can have the time that you need to heal, to rebalance, whatever needs to happen. We will not foreclose on a home where the borrower has left the home for a period of time for medical reasons, as long as the taxes and homeowners insurance are maintained. No one's looking in the window. But just to give you an example, I had the child of a borrower call me and say, I'm getting notices from the reverse mortgage servicer saying that my mother's house has fallen into disrepair. So what happened was neighbors were complaining because the grass was coming up to here, and the hedges were jutting out into the street. It created a problem even with the zoning board because there was a stop sign there that was obscured, and no one was making sure that the house was safe, and there were rodents that had populated, and so there is that expectation, at least for the sake of your neighborhood, that the house is being maintained. So if you have a gardener who's cutting the grass, or you have somebody who's maintaining the property, that needs to continue to happen.
Keep it up.
Keep it up. So it's not an eyesore, it's not a safety hazard.
Right, exactly. Wow, okay. And so you touched on a requirement of the home being legally the senior's primary residence,
Yep.
even though they may not be residing in the home for a certain period of time.
Right.
So what you're saying is if a senior has to go into a longer term, type care facility, the family or the senior can't rent out the home now and turn it into income property. They can't put a tenant in there and start collecting rent.
That is
correct?
absolutely true. They
Okay.
cannot rent out the house. Renting out the house would trigger a change in the type of insurance. So rather than having homeowners insurance, you would have dwelling insurance if you're renting out the house. The minute the mortgagee, the lender, gets notification that there has been a change from homeowners to dwelling, they're going to call and say, hey, what is the deal? This is not supposed to be a rental property, and that's how they're going to find out. You need a person who has a home that they are renting out does need to have the proper insurance, because can you imagine you have this $2 million asset, you're renting out a home, which is fine, but you don't have the right type of insurance and the house goes up in flames.
Right.
And then the insurance company says, sorry guy, you didn't have the right type of insurance. We're denying your claim. Oh,
What a nightmare.
nightmare.
What a nightmare.
Your house went up in flames and you have no recourse. So, and it's called insurance fraud if you keep homeowners insurance and they find out that you have tenants. It's just not good. So.
For a scenario where, because we're seeing a lot of people build ADUs, accessory dwelling units, guest houses on their properties. If the senior is living in the main residence, let's say, and rents out the guest house, would that be a scenario where they could still potentially qualify for a reverse mortgage, assuming they also have the proper insurances in place?
Absolutely.
Okay.
Absolutely.
Because we're seeing that a lot. I know a lot of
Yes.
people want to stay in their homes. They have some equity. They have some cash, on hand. They've built a guest house and they think, you know what, this will be a great little source of income for me. But it may not be enough to cover all of their expenses. So in a scenario like that, they could be residing in the home, still do a reverse mortgage, and have a tenant
Absolutely.
in the guest house.
We can do reverse mortgages on anywhere from 1 to 4 family homes.
Okay.
So you can own a true investment property, 4-family home, and do a reverse mortgage, again, with the proper insurance and that your unit is compliant with, you are going to have insurance that reflects that you are the owner of the house and it's your primary residence, and yeah, for sure.
Oh, that's awesome. Good
Yeah.
to know, because we are seeing, the city of LA has become so much more friendly and amenable to the idea of people converting their garages into guest houses or building freestanding ADUs in the backyard. And that's becoming a lot more popular nowadays. So that's good to know that having a tenant doesn't necessarily disqualify you from being able to tap into a reverse mortgage. You just have to be maintaining your primary residence at that home.
Correct.
As well, and be able to prove that, certainly. Wow. You are just such a wealth of information. I love it. I feel like we've covered so much. Is there anything we haven't covered that you would like to address, or any other points to drive home, or do you think we've pretty much covered it? I have another topic that we're going to do another video together on, but for the purposes of this global,
I think we're good.
we're good?
Yeah.
Okay. Thank you so much.
Oh.
You are just a gem. I love
thank
talking
you.
to you always. You've been such a wonderful resource for me and my clients, and I'm super
you.
grateful that you were here with me today to talk to our wonderful viewers. I want to thank you all so much for tuning in. It is completely my pleasure to be a resource for you in any way that I can. If you have any questions about reverse mortgages or real estate, or anything else that you think I can help you with, I have a wonderful network of trusted colleagues just like Janice over here. Please feel free to reach out. I'm excited about the next video we're going to be doing together on another topic that could be a wonderful way to employ reverse mortgages on a purchase of a home. So stay tuned for our next video. Until next time, take care of yourselves, be well, and I will see you soon.